Welcome to Business Redefined, a special edition because the banking season is upon us. The numbers are coming in every other day. ABSA Bank is the latest one in town with a stellar set of earnings for FY24. We are now privileged to have Abdi Mohammed, MD and CEO. Karibu sana.
Asante sana, Julius. It's
Abdi,
good to see you.
Congrats on the numbers.
Thank you so much.
Let's talk about the strategy of the business. This is year 2 of your new strategy. And more importantly, I think in my own analysis, FY24 are the first full set of earnings that we can say are Abdi's. How do you feel about that?
Well, it's a good set of results. It shows that the 5-year strategic execution journey that we are on is on track. We've maintained some amount of operational flexibility depending on the context, but the key, elements and the key pillars of the strategy and the North Star of the organization's purpose that guides us has remained the same. We've remained faithful to the journey. We've continued to execute. Every 6 months, we've given the market the update on where we are, what we have done, what are the challenges, how are we fixing them. So the numbers are just an outcome. They are a reflection of the executional elements of the strategy that we have done so far. And I feel good about the journey and where we've reached. When you're running a large organization, there are always certain issues you're dealing with, but the numbers show the journey that we are on.
The start of FY24 was very tough on the macro side. How nimble was your strategy in view of those constraints?
It was, I think you will recall that we were coming from a high inflation environment, higher, let me say, relatively. The MPC had taken quite a number of effective actions that continued to show that drop. We looked at the economy through a sectoral lens as well, and there were sectors that we were quite bullish on that we worked well with. From a risk management perspective, we moved to a more data-driven approach especially to our lending business, and ensuring that you have greater accuracy and greater ability to project clients and client performance. And when you look at all those things put together, what we did on the area of talent and people, what we did on the branding side, we feel that whatever was presented to us from a perspective of 2024, we were able to respond, and we were able to work within that dynamic.
Okay. Your new strategy, if I could still call it new for that matter, is focusing on revenue engines diversification. How is that coming through?
It's coming along quite well. Diversification has been a core part of what we do. Today we showed that pie chart, which shows a very good distribution, first of all, in terms of business segments between corporate and investment banking, the market side of the business, business banking and SME, and then the consumer franchise, which is the biggest revenue driver at about 48%. But what you don't see within that picture is that within those business verticals, there are a lot of new revenue streams that we are looking at and that we continue to drive. The bank assurance business is growing quite well. We have the asset management business in consumer banking that is now market leading, growing rapidly, and taking out some very significant traditional players in that space. And we're very happy with the growth that has been achieved there. In the CIB business, we've launched the custody business, as you know, which is in its first full year was 2024. Some good mandates won there, and the business starting to show traction. So the diversification journey is on, and it's doing quite well. Another area we haven't been playing in a lot previously is the inward payments and remittances space. We've done some good partnerships there, 2 or 3 large ones that are starting to show the inflows. It's showing up in the revenue, both in the corporate banking side, where the partnerships are managed, but also in the consumer banking side, where the payments terminate, and we are seeing some growth there as well. So the idea is, of course, as a bank, intermediation and lending is still a big part of what we do, but there is a lot of diversification around it to ensure that we are building a truly diversified financial services organization, which is the vision that we are working towards.
Abdi, I'm surprised you haven't mentioned the investment banking business, and some good tickets coming on that side too.
Indeed, there are some we can talk about, some we cannot, but there is some good flows there. As you know, it tends to be a chunky business with not high volume flows. Things happen, and sometimes you have quiet periods. But 2024 was a particularly successful year, and I think we are starting to demonstrate the capability that we have here in Kenya, which is being deployed regionally into the East Africa market. And we have some of the best bankers in that space, maybe your former colleagues, I don't know. But also looking at how that connects to our global hubs that we have, in London, in the US and other areas, and how that brings that capability into our offices here. So providing that fully integrated investment banking capability with a global presence is something that has worked quite well, and we've done a few important transactions there.
Okay. Abdi, ABSA has been repositioning itself to be more retail facing. We traditionally didn't know you for that. How is the traction coming along, and how, from a risk perspective, especially given the kind of environment we had in 24, how are you navigating that path?
Yeah, I think in our old branding, the bank was viewed more as a corporate high net worth brand. One of the big changes in the 4 years since we have been, 4 or so years since we've been ABSA, is that we are a truly African bank that understands the continent, that understands the countries in which we do business. And that has manifested itself in the way that we engage, especially with the business banking and SME sector. The personal sector, we've always been strong, and there is work that we've done previously. But in the SME sector, especially in areas such as agriculture and related industries, we've not played in the past, and it's been a journey of growth. I remember when I first came to Kenya, some of the very early events that we did was around the SME sector and how we drive that agenda in that space. Of course, from a risk perspective, it's a different ball game. It's a different dynamic. We have had to bring in the people capability that we need from different areas. So we have a lot of, experienced bankers from the market and also from elsewhere who have come into that space. We've had to build technology and platforms that support us. For example, in the business banking area, we have a platform called Wezesha, which helps us drive the ecosystem agenda that links our corporate customers and maybe their distributors, their suppliers, and so on. And we have a good system going there from a digital platform perspective. We are introducing self-onboarding in terms of the account opening and how a business banking customer can join the ABSA brand. We've also done a lot of work on data and AI and how that supports better decisions in the lending area, for example. And therefore, decisions become a lot more accurate, and you are able to project potential events much better through the use of data. So yes, it's an area that previously the bank did not play, but in the last 4 or 5 years, we've established a dominance, not just in the growth and balance sheet, but also in the visibility, the events that we do, the empowerment activities that we do that have been very well publicized. It's a big part of our sustainability agenda as well. So there is a specific proposition that is looking at women-led businesses. And this is an area where ABSA has been a leader over the last few years. We have a very strong Islamic banking proposition that runs under the brand of Lariba. It has been there for a number of years. We've seen a lot of growth coming from there. And many of the clients in that space are also from the SME sector. So it's new ground, it's exciting. It's showing up in the diversification of the book and the diversification of the portfolio, and we are happy with where we are. And there is, of course, a lot more to be done.
Abdi, you're a captain of industry, and this question might be a bit of a wild card.
Yeah.
So the Business Laws Amendment Act of 2024 amended the Banking Act to revise the core capital requirements, of course, over a horizon.
Yeah.
But 2025 is the first year that we're seeing the bump up from R1 billion to 3 billion shillings. How do you expect this to impact the industry? And of course, ABSA has no struggles with capital, for sure. But there are players who might be struggling, 10 or so from my own analysis. Would you have appetite for some of those?
Look, I think first of all, Julians, you know, the regulation is meant to create a stable and strong banking sector. It's something that any economy requires. The direction of travel has been there for a while, and now it's in execution mode. It's good that there is that runway to allow people to build up their capital, and you know, some of our members are doing that already. With regards to the second question, which I think is the wild card that you are talking about, for us, we keep an open mind on this type of thing. You know, we have a strong organic strategy that is already yielding fruit, and as we have explained, we have a key stream within our strategy today around partnerships. Even before you get into real inorganic activity, there's a partnership element of it that we continue to look at, and we've established some very good partnerships in the fintech space, in the payment space. I was just giving the example of World Remit in the inward payment space, and many others that we are partnering with to bring more capability to our customers. And then in terms of inorganic, which is that final frontier, you know, the mind continues to be open as and when there are any opportunities that work for both parties. That's always something that we'll be curious about, we'll be open to. I think that's how I'll answer the question.
Okay. 2025, of course, Trump 2.0 is here with us. We are seeing a lot of changes every single day. Sometimes we're not sure what to expect anymore. How do you see this impacting the business landscape?
Yeah, there are unknowns in that space. And you know, the thing about geopolitics and what happens in the world is that it has broad implications that affect many people. And when it happens in the largest economy in the world, that impact is even more. I think that it's a bit early in the game. We've seen certain activities and actions, as you say, that have had impact in the stock exchange in the US and other places. Some are fundamental in terms of funding and what it could mean. But at the same time, as you say, it's a very short runway so far. It's hard to build a consistent picture and a consistent outlook from it. I think all I would say is that we continue to monitor that space. It could yield positives. It could yield challenges that we need to deal with. And it's one we continue to watch. So, and we'll use some of your insights, because I'm sure you're doing a lot of reading up
Keeping
on that
tabs.
as well. Yeah.
Absolutely,
Yeah.
absolutely. On the macro side, we seem to be enjoying relative stability, FX, inflation, interest rates. What are your expectations in terms of the general trajectory that this is likely to take in F25, and how does that reflect now on your business?
Look, I think in that space, especially monetary policy, if I can be specific, it's been a class act in terms of the way it has been implemented over the last 2-year kind of horizon, starting with 23, with the foreign exchange liquidity issues, the currency at 160, inflation, coming down from a high of 9, but still outside the range. That's where we were in 23. The consistent policy actions that have been taken in the monetary space, the corridor framework, which was implemented in 2023, creating more transparency within the FX market, through BMatch and the other technologies that were implemented that opened up the liquidity in the market. And more recently, the actions taken around CBR, the monetary easing.
Even CRR.
Yeah, the monetary easing once the inflation targets have been achieved. I think it's been excellent. And I think from an industry perspective, and this is something we've told the governor in the calls that he does with the CEOs as well, we're really supportive of the general journey that we are on. We're supportive of the actions that have been taken. 2024 was almost a transitioning year with the rates peaking and now starting to come down. You will see that the lending books across 2024 were flattish. But when you look at the opportunities ahead of us with the low rate environment, low inflation environment, GDP is still showing resilience, driven by a few good sectors. We see the potential for private sector credit to start going up again. And that can only be good for the economy in general. But at the same time, we continue to watch the broader geopolitical elements that could have impact that is of a global or regional nature. You mentioned the US. There could be a few others with potential impact on supply chains and other elements. So it is cautiously optimistic. There could be growth and takeoff coming up out of what we see in the elements, but at the same time there are potential stresses that we need to look out for.
Okay. You mentioned the private sector bit, and in Q4 last year, we actually saw a contraction, Abdi. Yes. And when I sit with executives like yourself, I wonder, at that point, what was really playing out in your mind? I mean, we haven't seen a contraction in a very long time. Yeah. Was this a prime concern for you? Was it a case of saying, well, look, there's no demand from the market, so either way, we simply fund the assets which come our way? Right. Yeah.
It's a combination. It's a combination of where the price points were at that point and the effect that it has on client demand, but also a combination of the clients themselves and the views that they had, and a certain amount of wait and see kind of attitude. But when you look at the market today and when you look at the potential transactions, especially in the corporate banking space, we are definitely seeing a response to the drop in price that we've seen in the market. As I said, again, it's sector specific. There are certain sectors that you are aware did not do very well last year, and that had an impact on the overall lending that we were able to do in the market. But the outlook for 25, keeping everything constant and seeing what we see in the pricing conversation is one of potentially private sector credit going up again, and that would be really positive for the overall economy.
On that pricing conversation, Abdi, I like asking this question. So many Kenyans I talk to tell me that 2024 is the year that banks flouted what we call the social contract of banking. You're supposed to be with businesses through the high and low seasons. But last year, even as we saw the central bank quickly cutting the rates, we didn't see similar response from banks in terms of the lending rates. When you look back, would you say we could have done better? Would you say there were constraints within which we had to play?
I think the journey that we have been on this issue, overall as an industry, and actually it's an ongoing journey. We are looking at the next model and how we make it work better, has been a journey to create, first of all, transparency in that whole process, ensuring that a typical banking client knows how they are priced, how it links to the CBR, and creating that transparency. The second component of the journey has been looking at transmission, and I think that's the point you make, which is when the decisions are made, within what timeline and through what parameters is that passed on to the client, and how does that reflect? I think there was some amount of transmission. It was mixed in terms of the extent of it, and it depended on the individual approved risk-based pricing models that were in place at the time. In our case, we have an internal base rate. It automatically tracks the CBR with a lags of weeks and immediately comes into play. So the customers who are priced off that internal base rate get the benefit immediately. And we showed today that, between the last change and now, we've come down something like 350 bips on that measure. And then we have the bigger risk-based portfolio, which also trended down. And there is where there have been some differences in different banks. And, there's an effort to continue improving that whole mechanism, making it more transparent, more transmissible, and more standardized across banks, so that the customer can get the transparency and the ability to compare banks in a way that they can fully understand. And so this is something that we support as a KBA. It's been the number one conversation in our discussions at the Governing Council and the wider membership of the KBA, to ensure that we all get to a point where that transparency is maintained, and we build trust on this new methodology that we want to drive. So I would say the commitment is there, the willingness to ensure that we do the right thing and ensure that we are driving it is there. It shows up in all our conversations in the KBA and also with our regulators, but it's a journey. The risk-based pricing model was part of that journey, and I think we are now looking at how do we make it even better. So that continues to be a focus area.
Final question, Abdi. In FY24 for ABSA, and I think across the industry, we saw some very strong volumes coming through the digital channels, the TIMIZAs and the likes. And I think understandably because of the requirement for working capital, short-term financing. In FY25, do you expect that to change, or it continues that way?
We expect a continuation of the same. We're using that platform to reach more clients. We continue to innovate the product set that we drive on that platform. We are increasingly looking at it beyond lending as a platform to deliver wider banking services. We're looking at it to drive more engagement with the youth and the younger market. So there's a lot of engagement and work that is going on. It's one of our core priority areas for 2025, and you will see that continue to grow. And as I was saying, data is such an important part of that game, and one of the reasons why that platform is delivering loss rates that are relatively better than the market is because of the data capability that we've been able to deploy into that as well.
We've been having a conversation with the man in charge of ABSA Bank Kenya, MD and CEO Abdi Mohamed, on a strategy-focused conversation on their FY24 and the outlook for FY25. If you want a deep dive into the numbers, into the numbers, go to our YouTube channel, that is Business Daily Africa. You'll be able to find a conversation with Yusuf Omari, the CFO, and there we pencil in through the number items. This was more strategy-focused. Thank you so much for staying tuned.